The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting for Larry Pesavento, and Larry's still away on tour, and it's my pleasure to be sitting in for him. And let's just run the numbers. Dow's down 6, S&P's down up $1.55. You got the comp index down 8 at 39.34. Apple comes out with earnings today. It's unched at about plus 14 cents at 526.10. Bunch of things that I'm going to do right now. I know that Larry likes to look at them. Let's do that together. In the let's just do this one at a time. INDU. So the Dow itself it just made a slightly new high today from Friday's high of 15,528. It went to 15,000. Oh, oops, that wasn't 15,570 on Friday. Today it's gone to 15,578. And when I'm looking at the technicals, in this case, I don't look at the patterns that Larry looks at of the Gartleys and the butterflies. Actually, I shouldn't say I don't. I do look at those. But my major technique has to do with the stochastic, the MACD chart formations that repeat over and over again. Let me just get rid of this because it's now history at this particular point. And what I'm looking at is, in this case, a V-shaped formation in the Dow. Let me move that away. In the weekly chart of the Dow, there are a series of U-shaped formations. My experience with the U-shaped formation is that one is great if it breaks out, but not if it's repelled by the left side high. In this case, 15,542 back on the 24th of May, was retested on the 2nd of August at 15,658, just 16 points higher. 116 points higher, and then it pulls back, and it's made a higher high, pulls back, makes a higher low, and goes all the way to 15,709 on the 20th of September. Another U formation, like a lowercase u. Then it pulls back and it goes to a lower low, but below 14,760, it goes to 14,719. The low on the 28th of June was 14,551. So it's above that, but below the last one. That to me says, be careful for two reasons. Instead of making higher highs and higher lows, you'll be making higher highs and higher lows except for this one time. And that might be saying two things. One is, it says you could make, if you combine all the weeks together as the weekly chart, you could combine it to make basically a shadow from the previous high of 15,709 by going slightly higher, but there's a good chance you're going to come back into the range again. Or you will fail by making a lower high and have to see how the 15,360 to the uptrend red line over there, 15,253, acts as support. All that being said, there's a real simple technique that I've used for subscribers and right here for my analysis for ages, and that is the volatility index. So let's just jump a minute right to the volatility index since it's so important. The VIX.X is trading in a low level. This is saying there is buying pressure. I'm going to draw a little pattern here that says there's an H formation. Yes, it could become an M formation, even have a slightly higher high because it hasn't made a lower low. It hasn't gone below the 1234 low of the 18th of October. And that says there's room for some kind of a correction here in the market. But at this particular point, as long as the volatility index is under the 15s, not breaking above the $15.10 200-period exponential moving average, buying pressure remains. Okay, so now we've got that settled. Now let's look at something else. And if I look at the weekly chart of the VIX, the volatility index, you will see that these cup formations invariably end with a spike to the upside, in this case, right to the inside track. This is a technique that I love to teach. It's a range within a channel on the outskirts of the channel, within the top downtrend or uptrend line, just, I like to say 3/16 of an inch, but of course it depends on the chart. You can't really go by that. But just a narrow little channel becomes the repellent area, or if it's at the bottom, it becomes a propellant area. And in this particular case, the pullback all the way to the 12s is as sharp as any pullback you've gotten from a spike to the upside towards that inside track resistance after the 21.34 most recent high. It was about 4 weeks ago. So that's saying there is buying pressure. The selling pressure is minimal. The buying pressure is, I wouldn't say maximal, but it is in the maximum area. It is in the area that is underneath the 9-period moving average in the weekly of 1423. You've got to respect that. And the monthly chart has had a series of failures, constantly pushing the price back under the 9-period moving average, and there it's at 15.47. So we've got until Wednesday's close. Thursday's the 1st, I believe Thursday's the 1st. And we'll see the price got repelled exactly at the 200-period moving average in the monthly chart. So now I've said that, let's go to the simplicity of other charts. Let's go to bonds. I was asked about bonds. Let's look at bonds. And bonds, I have to call this a peak B in the daily. I don't really have any other way of notating it right now. You can't go to an H. There is no H in the Chapman wave methodology. We made a decisive peak F top in the continuous contract at about 133, 134 back on the 2nd of October. Now we're pulling back. And as far as I'm concerned, this is the one that needs to be monitored closely. Why? Because having gone this high, the 136 and 3/30 seconds, 200-period exponential moving average in the daily chart really looks like it's where the price wants to go. And if it does that, it'll start leg C the moment it takes out 135 and 24/30 seconds. And this technique is so simple. 1 penny above, in this case 1 tick above 135.24 and 135 and 25/30 seconds starts leg C if that occurs in the next couple of days. The weekly chart is really making a U-shaped pattern, one that could fail at any point, but the stochastic has gone to 84%, above 80%. I love that. The daily's at 89%. And the month and the weekly chart of the MACD is still expanding. So this is all very positive. I mean, we have closed above the important candle high of 135 and 14/30 seconds of the week of the 5th of July. That says that this very ugly bar of the 28th of June, that's the week of the 28th, at 134 and 23/30 seconds high and 131.23 seconds low, that's the bar that's trying to be filled, and it's going to be very important. Hey, even more important, I've been talking about this for a little while. If this beautiful up channel, the inside track up channel, and this channel goes back 20-something years, if that holds this month as it did last month, it says you're at the 9-period moving average. I've already drawn in a price movement. It says bonds could go to 138 to 140 in this particular move. They're at 135. If the weekly chart continues to strengthen and you've come off the low of the stochastic in the monthly chart from under 20% to 19.47 and the month is not finished. So that's going to be really important action. So bonds are saying unless there's a breakdown, and bonds break below, they're at 135.5, let's call it. Unless they break underneath 134 to 133.5 in the next week and a half, if they do that, it'll be a failure pattern. 133.19 will be the target on the downside. Okay. Let's look at the dollar. The DXY is trying to form some kind of a strong candle after the doji, long-legged doji of Friday. 79 round number in the continuous contract. DXZ is at, yeah, it's doing the same thing. Was there a round number in that? I wonder. Sometimes they work exactly together. 79.06, very close. I'll have to look at round numbers. So that says that the dollar, if the dollar is able to take out this resistance of 79.50 on the 9-period exponential moving average, then all of a sudden that very ugly candle, you remember on the 22nd now the dollar just went plop. Well, that 79.79 high, that will become a target. And then all of a sudden you're going to tackle the whole candle of the 17th of October, which was even uglier. But I go one step at a time, and all I can say is that so far, on a weekly basis, we are a full 2 3/4 of an hour into this week. The week finishes on Friday. The month finishes at 4 o'clock on Wednesday. So the weekly chart says the bar that we're talking about, with that 79.82 high of last week, that's going to be very, very important. And when I say very, very, it's not just very important. It's not just important. It is very, very important, because if there's a close underneath 78.50 anytime on any day this week, that monthly chart is just going to look horrendous. And it already looks, I wouldn't say horrendous, but I'd say it looks pretty darn ugly. And I'm going to change this so that it doesn't become complicated. I'm going to put this over here, put that over there, just so that you can see the power of these arch formations. I love to draw these. Now, within this arch formation, there is, in fact, a heart formation. Just it goes there and then it goes there, but I'm treating it as a larger arch. And that arch says a close below, oh, it's the same thing, below 79. What was the low this week? 79. A close below 79 on this continuous contract. There's very little support. You break 78.10, the low of February of 2012, and you're right into this whole area. You've already broken the up channels, the up track support. So the dollar on the monthly basis is looking terrible, which means if you look at the monthly chart of the euro, it's acting very well. See the green line, these descending 1, 2 price targets. I use the body there, and then you come down. It says that the dollar this month is trying to tackle that inside track. Because in my Chapman Wave CD, introducing the Chapman Wave methodology, there's a pattern that I call, let me just go here, find inside track. Okay, there, that's the inside track. You see the little dashed line there? There's a red line, a dashed line, and a dashed green line, and the green line itself. That's within a channel you can do that. But in fact, it doesn't have to be within a channel. Let me just see if the other examples. Yeah, there's another one. Inside track. So that inside track that we're looking at right there says a close above it for 2 out of 3 bars. That's 2 out of 3 months. Takes you to January. Has to succeed by not, if you break above it, you cannot go back and hold underneath that green line. You've got to be bouncing off it. I'll be right back. Basil Chapman sitting in for Larry Pesavento. Now the Dow's up 6. S&P's up 2.62. Nice action.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, The Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, The Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, Basil Chapman. So here we are. We're looking at the Euro-USD currency pair. Remember, it's a mix of currencies, overweight in this case, the Euro side. What we're looking at is what is the waveform and what is the count? Well, there's a particular technique that I use. Let's just imagine that you don't know anything about the Chapman wave methodology, you don't know anything about waveforms, but you do know that you can recognize a cup formation, an arch formation, and trend lines. So there's something else that I do as well. It's called the left side, right side price time match. The other thing is in a cup and ladle pattern, and that's, there we go, a cup and ladle, the cup and handle is where you stop at or just before the previous most important lip before the cup formation starts. In this case, it would be the high of the 1st of February in the euro, the week of the 1st of February. Comes back down, it produces the H pattern with a successful left side test, and then that takes you to a cup formation. If you break out, if not you, but if the price breaks out, having successfully not touched or broken below the left side low, it says the price can rally to at least the H high. That is the high of this particular bar. That's the high of the 21st of June. If you take that out, you should still pull back into the arch and test, which is exactly what it did. It broke out and it pulled back. Now it's taken off and it's broken decisively above the left side low. That's last week. left side high. But the most important thing is, what's the wave count? Well, the wave count that I have on the chart that I've notated here says it went to peak ABC, then it went to a D, and it either recycled up into an ABC or it's continual EFG. G's are very unusual charts. You do get them, but they're unusual. I tend to say if you see a G, go back and check to see if you might not have made a mistake, or if there's just another way of counting it. You want to get to a D as quickly as possible, as possibly legitimately. Because what does it do? It allows you to prepare and say, okay, limited upside. I could be wrong, but at least I'm going to either take my profits if I'm in it, or at least I know that the pullback should hold just at or just under the left side high bar, in this case 3.371, high of the first week of the 1st of February. But it can go to the 1.35, the 9-period moving average as well. So all that I'm looking at right now, the week has barely begun, 3 hours in, and there's a lower high bar, but you've got the entire week. It's not a monthly, it's a weekly. So you've got until Friday's close at 4 for it to just squeak above the high of last week, which is 1.383. So the euro, to me, with the MACD at 93% and flat, the stochastic flat, and the MACD expanding, looks very good. You could get a pullback, but so far it looks to me like the weekly chart is leading us to the monthly chart, and that monthly chart by 4 o'clock on Wednesday, if it closes above, I'll give you the exact figure right now. If it closes above 1.385, it's at 1.378 right now, even with a little mini pullback that we might get at any moment, that'll be really positive. Now, what we're looking at is, what if I use that information and I extrapolate and I say, well, what's going on in weekly, daily, monthly gold? Well, this is very interesting. Gold is in leg C with the doji candle. The GLD, which is supposed to trade at 1/10 the price of spot gold, is in leg, there's no other way I can count it, is in leg D. Gold trades 24 hours a day, so it alleviated that gap, that little price movement of peak A back on the 15th and 16th of October. So gold, I still wait for Ds. So gold is saying the GLD could pull back, have another little pop-up, but it's acting very well with the stochastic at 91%. It's actually producing what I call a squash between the stochastic and the MACD. I'll be teaching these techniques in my all-day webinar. Please check it out. This is just an amazing thing. I keep looking at it, I keep lifting it up and say, what? November the 8th. Master Trader Series, Basil Chapman's going to give a full-day webinar from 9 o'clock in the morning till 4:30 in the afternoon on the Chapman Wave. It's going to be core curriculum of the Chapman Wave. If you've never done anything, I'll take you through it so that you'll be surprised how many emails I get almost every day from people saying, thank you. It's so easy to be counting these peaks, and I know when I need to just pull back a little bit because I'm not sure. My rule of thumb is if you're not sure, let the price play out. You'll become sure within another 2 bars at least, 2 or 3 bars. And what we're doing is we're giving you $200 off the registration price of $7.95. So that's $5.95. You get a $249 value of my CD introducing the Chapman Wave methodology. Look at the patterns. I showed them as clear as you can make. I give you my newsletter for a month free, $128 value, and you get 30 days to archive. If you can't make it on the 8th, you can archive it on the 9th. It'll be there, 9th, 10th, 11th, 8th. It'll be there for 30 days.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hello, so we're back, and we're looking at gold is holding very well. Silver has made a peak C. It should go to a D. Let me just type that in. This is the continuous contract. It should go to a D. There's a left side, right side price time match, which is actually extended now. I have to push it out a little bit, so that'll be there. Then I'll say to there, and I'll give you exactly what I'm looking at here. And it says that by the first week of November, silver should be attempting to hit that 23.45 area that was hit on the 19th of September. What's very important about this is that silver is lagging gold in terms of this most recent rally. The H pattern in the weekly chart, there's another pattern I call the expanding cone formation or falling axe. Looks like an axe blade that's on the way down. If it breaks above it, silver has to climb to 24.54. It's at 22.50 right now. This is the continuous contract. This H pattern has a chance, and this is what I think is going to happen. It just seems to me, I've watched this long enough to know that that's a great possibility, that silver's just going to make another arch formation. Then that arch formation should take it to, around about the 24.90 to 25.20 area over a period. There's that H that I drew in right there. So that's what I'm looking at there for silver. Now, high-grade copper, HG, I'm looking at the continuous contract here as well. That's the one that's demonstrating to me that copper is in a trading range. It stayed in the trading range with a high of 339. let's call it 340 just for argument's sake, and a low of, I think, 318 or so, 319, yeah, and a low of about 380. It's just stuck there. And until it can decisively break that 334 200 period exponential moving average resistance in the daily chart, I just think it's stuck. But I do think there is support for it in the 320s, the low 320s, the 322, 321 at this particular time. And I think there's resistance at 332, just near term. Those are the parameters. Now let's just do something else. I wanted to do this earlier on. I wanted to go through a couple of, I wrote it down here. I want to look at the hot stocks, like a Tesla. To me, Tesla's made some kind of a top of importance. On the daily chart, peak D at 194, just wanted to check, 194.50 with a round number 189 open and a 188 low, right there. So that day, I should have put the day in, the day of 9/30, so September the 30th, 9/30, 9/30/13. That to me is very important because it's also broken. I probably would have given this to my subscribers as a short over the last week. In fact, I didn't want to confuse my mind. I didn't want to, in this particular, sometimes I don't mind doing it at all, having longs and shorts. I just wanted to be focused on long positions right now. And so far, they seem to be mostly working out very nicely. We'll just deal with that. But look at this. I've got an alternate wave count in the weekly chart of a G, maybe a C, but I'm calling it a G right now. It's come down, and last week it closed under the 9-period moving average for the very first time since it broke out. That goes all the way back to about the week of the 22nd of March of this year. And there's a Roman candle that I've developed. It's called a Roman candle right there. That candle, and having gone halfway in, it says this is a real good chance that Tesla is going to test 160.15. I was behind the Tesla yesterday. Well, first of all, I was in front of it, and then I was very much behind it because he was zipping along the Mass Turnpike. And I must tell you something. I'm more and more I'm convinced. And then I was actually at the Tesla in Natick. I was at the showroom. It's just it's a fabulous vehicle, but I just get more and more disappointed. The style is already old-fashioned. It's just not, and that's just my own personal point of view, but I'm making a big deal out of it because I would expect that they would have gone all out to make it a very contemporary look, rather than a little bit old-fashioned, but not old-fashioned in the good way. It didn't have the old Ferrari or any styles like it. It's just kind of, so, now, the other thing is that the colors, they needed to have made, he should have highly original colors, and he hasn't got colors. I know he's wanted to keep the costs down, he has to. But that's just my own perspective, and we'll see what happens. It's not going to change sales. It's just my own opinion. So here we go. Tesla looks to me like it's going to go down and test the candle of the August the 23rd. A high of 162.30. It's at 163.88 right now, at 163.84 TSLA, and a low of 142.63. The reason, I think, one of the only reasons why I didn't just jump in as a short is because when stocks have very high short interest, it's not that they don't go down. Believe me, I can show you, hundreds and hundreds of examples of stocks with high short interest that went down. It's just that those are the stocks that bounce back really quickly. So you give back gains. It's one of those things where you should keep taking your gain and go back and take a gain, go back, because one of them will miss, but most of you want to keep taking gains. My eye says that from the monthly chart that there aren't going to be many big bounces, but that's just my eye, and that's not the price. So the monthly chart is a leg E. Boy, that gives it a lot of room to pull back if it's going to start a pullback. Now let's go to something else. I wanted to do the other. Apple comes out with earnings today, or whatever it is they come out with. This is a peak D with a stochastic at 92%. There are two technical indicators that say if Apple doesn't make a new high tomorrow, about 533.23, because this buy signal to buy mode is completed. In a buy mode, the Chapman Wave methodology, and this is what you'll learn when you come to my Master Trader series on the Chapman Wave week from Friday, you will learn that at peak D, it's that moment when you want to just have some, that's when it flashes a cautionary light, but all you got to do is make your stops real tight. Now, sometimes you get enough signals to say, stop tight. No, I want out and I want a short. In this particular chart formation, I've got one indicator that is within a day of giving a signal that says that Apple could be within 3 days of pulling back, but it hasn't done that. It could recycle to the upside with a decisive move tomorrow. If tomorrow's close, I'm not talking about gap up openings tomorrow or anything, I'm talking about if tomorrow's close is in the 5, it's at 528.50. If it's at 536 to 538 or higher, that's going to be very interesting. But if Apple has such a spike that it goes into the 555 high of the 1st of January, that round number high, should be 555, not 55 round number high. All of a sudden, this weekly chart is recycled to leg C, and it's saying that ugly bar, it's already past one ugly bar, but the next ugly bar of the 7th of December, 594.59 was the high, 518.63 was the low. That's the bar that it's going to try to tackle next. More importantly, the monthly chart has been saying this is a bounce. Just like, look at the chart. Keep your eye focused now. If you're looking at Tiger TV, look at this Apple chart. Now keep your eye on it. This is the right-hand side. I want you looking right here. I'm going to make it a little bigger. Okay, keep your eye on that. Now look at this chart. Watch, watch, watch. You see that pattern right there? And then the breakdown. Let's go back. Apple. That, from the doji candle high of peak E at 705.07, back in September of 2012, you've pulled back to 385.10, gone peak A, peak B, leg C. This is going to be really important. It will fail if at any point in November, if Apple suddenly starts to take out the low of this month, 478.28. 478.28, and you're going to make that arch formation. So I'm watching to see if this particular pattern's a repeat. Why? Because the stochastics at 27%. That's good. But the MACD is taking a long time to cross positive, and it could still deflect lower. So I'm not saying that it's going there. I think longer term, I've had a target of Apple below the 385 level. I'm going to be completely wrong if this move in Apple takes it into the 550s now. I mean now, meaning this week or by next week, because that would be really, really good action. And that'll say, you know what, Apple's now just a regular old company doing the right things, and therefore it's going to be looked at as an inexpensive stock, even though it's trading at 528, I'm sorry. It's an inexpensive stock if it has that kind of reaction to any earnings news. A disappointment would say it fails this week to make leg C higher, or even next week leg D, because it's going to plummet below 513 to 500 key support. If there was no earnings coming out right now, I'd say I like Apple. If I was long, I'd remain long. If you're a little bit nervous about earnings, I really don't know if it's worth messing around. Take something off, then you've got to put it back on. Do you want to risk 2.5% because it could drop 20 points? 519.06 is the key support level. I don't know. You have to make those decisions. But it's acting really well at this particular time. So that's what I want to look at. Now let's look at something else. When I'm looking at stocks like AN, hope I've got this notated, yes. Every time he comes on CNBC, I'm trying to think of his name. He's a great analyst for his own market and his own stock. But the stock itself has these very quick spurts to the upside. AutoNation, cars and truck sales, trading at 49.12, down 4 cents. Now look at this monthly chart. It recycled. Let me do this right there. That is an F. That's a restart right there. Now it's making a peak E if it doesn't go above the all-time high of, whoops, I didn't mean to do that, an all-time high of 54.49. It's trading at 49.12, down 5% from there. They have fantastic sales, and it keeps saying we've increased. I'm always fascinated by the stock because it has some pretty darn good pullbacks, but then it keeps making higher highs. This is a stock that says to me it's getting a little bit tired. If this is peak E, it's going to have time and price to the downside, but it doesn't have to have all that much price. It could be more time as it just falls in between 45 and 41, maybe 40 or even 39 over the next month if there is weakness. And that weakness will only be confirmed if it takes out 47, 45, the low of 4 weeks ago. And if it takes it out, then all of a sudden you're looking at a price that says, okay, there's that range that I'm going to be stuck in. And I thought it was very interesting because auto sales have been pretty darn good. And here's this guy with a stock that's quite a bit off, 10% off his highs. And we'll look at Ford in a moment as well. Let me go to Ford, in fact. Ford right now. AN was a symbol of the stock we were looking at. See, here's Ford. It's holding the 9-period exponential moving average. Everywhere you go, you see Fords. Everywhere I go, I'm driving along, I see Fords. And I like the design of the Fords. I'm looking at this and I'm saying, if that is an E, you should get a pullback under the Roman candle, a couple of Roman candles. But this action today in a market that's just kind of hesitant, trying to get some traction to the upside, I would have to say that that's nice. Walking the 9-period exponential moving average, F is the symbol at 17.68. Well, let me just write that in. So, in looking at this, I've got Ford sitting on the 9-period moving average in the daily, and the weekly chart is making a cup formation, like F/B, nothing wrong except that the MACD is not that strong. Stochastic is acting very well at 79%. It's that monthly chart that says Ford wants to go back and test the 1897 high. And that's what I'm looking at. So Ford so far acting very well. I was a little disappointed in the 2 days action after the earnings, but if it does pull back, it'll have to close underneath 1742 for me to say it's going to take a bit of a timeout. So that's going to be important in terms of Ford's action. MACD is very good. Stochastic's at 82.92. I do like it. We have not got it. We did have it. I've stepped aside just for a moment, but it's attractive to me, and I'm going to see whether or not, how much is left in the stock to see if it's worth it before I think it gets a bit more of a pullback. So we've got a break coming up. Basil Chapman sitting in for Larry Pesavento. Dow's up 16, S&P's up 3.79. And I want to look at the housing sector, and I'll be right back straight after the break.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi everyone, Basil Chapman, Time Technicians Hour. So I'm looking at the Philadelphia Housing Sector Index. Made a peak D in the monthly chart. Most importantly, let me just pull this back a little bit. Do I have it? Yes, I have it. It gave a wonderful sell signal at peak E back in 2005 at 293.66 when it made that H formation and then started to collapse. And we got a sell signal which went to a sell mode. Then there was a peak A minus. This is just typical of the this particular pattern of that. You remember what I showed you earlier on of the H pattern that fails? Well, it kept going down, and then it made that large H pattern. Went from 293.66 to a low of 54.31. Ran up 3 peaks to peak C, pulled back, came down, and then started a brand new move to the upside. Now, the high of 132.53 back in the the week of April the 30th, 2010, 112.59, 132.38. Didn't see that. Is that a peak? Yeah. 32.38. Yeah, hey, that's a D there. So it goes to a D, and then it goes to an E. And right now it's at an E. But has this recycled? That's the question. Well, we won't know for a while until the Philadelphia housing sector, depends on the weekly chart, makes a U-turn. If it's able to, instead of the arch formations, it makes the U-turn and it breaks decisively above it. It's at 187. It's called a 188. If it can break 191.24, in the next 2 weeks or so, that'll be really positive because it's going to possibly make an arch formation with a test in the housing sector of the most recent high of 210.01. We'll see. It breaks down and forms the H pattern, and you can see that better if you look at the RWO. Jan the Den mentioned that I should look at that. And that weekly chart, as in leg B right now, but it has a more defined pattern of the H that goes to an M. So it'll be it'll be really positive if it can break in, if the RWO, the Spider Dow Jones Wilshire Global REITs ETF, if that thing can spike into, wow, if it can get to the low of 45.30, that's just another point away. That was made in May of, week of May the 24th of 2013, that low bar, that'll be very important. So we're watching, it breaks down if it breaks under 43.36. So we've got a point up or a point down is very important. And the daily chart, I've got it as a peak F right now. I'm not sure if I've counted it correctly. The low bar cannot be the high bar. I wish it could, but it isn't. And so this is the count that I've got now, F/B. So we'll see what happens. But in the meantime, if you look at, say, Toll Brothers, I think Toll Brothers in leg C, it's just nominally 34.19, 34.20. It made a nominal leg D up today. There, C. And it hasn't taken out the left side high. This is the bar that has to actually climb to have an overlapping wave. It has to climb above 35.02. It's at 33.46. Toll Brothers Home Construction. Len is in also. Did it make, I think it failed to make 37.77. Yep, it did. It also made a squeak into leg D. Isn't that interesting? All the home builders are right there. So this is going to be very important for the home builders. It looks to me like they need a little bit of a breather here after this move, but it's going to be the weekly charts that tell me the story. So let me just sum up quickly because we're about to, we've got Jim in Littleton. Oh, Jim, I'm sorry, I just saw your name. Hi, Jim, are you along the UNG?
Yes, I am.
Okay, I'm just going to say to you, I think the action's not bad today. I did do a whole thing on it in my last hour, but you got to watch the 1802 to 1790 as support. So call me again tomorrow. We'll look at it again. Sorry, Jim. Thanks, folks. I'll be back tomorrow. Stay tuned. We've got Daryl Martin.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.